While we're out here in America's technology heartland, it's worth remembering that the sexiest seeming tech stocks aren't necessarily the best ones to invest in. Sometimes you want to stick with a survivor that knows how to reinvent itself. A survivor like Cisco. We just spoke with Cisco's new CEO, Chuck Robbins, a little more than a month ago, right after the company reported a terrific first quarter with Robbins at the helm. But since then, the stock's been pulled down. So are you being given a gift with this pullback, or should you be more concerned about how Cisco might fare in a worldwide slowdown? Earlier today, I got a chance to chat with Chuck Robbins, the CEO of Cisco Systems. Take a look. Chuck, Cisco's been changing, and it's changing, I think, more rapidly than Wall Street understands. You've got a lot of businesses that aren't just growing at 2 to 4%. Could you outline some that are growing double digits?
Yeah, you know, Jim, our collaboration business, as an example, in Q4, it's a $4.5 billion business on an annual basis, and it grew 14%. And at the same time, we grew our deferred product revenues in collaboration by 21%.
Which means money in the bank.
Which is what Wall Street wants, is a more predictable, recurring revenue model. We have the Americas, which is, you know, $15 to $20 billion business for us. That last fiscal year, new orders grew 10%, which says that, you know, our products and our portfolio matter to our customers. They're resonating with our customers, and we're very optimistic about where we are.
Right now, you know, our viewers have loved John Chambers.
Yes. Difficult
shoes.
Yes.
At the same time, I detect there are some shifts here. I hear more collaboration with other companies. Yeah. John never wanted to go it alone, but there weren't a lot of companies that were worth partnering. That's changing for you.
Well, when you think about where we are, the pace of change is unprecedented. And I started in this business in the mid-'80s, you know, as an application programmer, and we would take 4 years to roll out an application, and that was okay.
Right.
And now you've got geopolitical dynamics, we've got rapid economic transitions, and the pace of the technology changes and our customers' expectations of us are going to require us to partner, because we can't do it all alone. So, you know, the Apple partnership that we announced was a great first step. And we view strategic partnerships as potentially contributing, you know, significantly to our growth in the future.
But I've got to tell you, when you announced the Apple partnership, it's very unusual, by the way, to see Tim Cook actually go somewhere else, go to you guys. I think that people didn't understand that it's going to change their lives. I've got my iPhone. When you call me and I want to go to a landline, I say, let me call you back. Yeah. Those days could be numbered, right?
Yeah. So there's three big elements to this, Jim. The first is integrating this into your enterprise voice architecture. So you walk into your office and you could have a device on your desk if that's what you want, or this could be your device and it's completely integrated into your voice infrastructure. So that's the first. So your point is exactly right. The second is we can actually prioritize the applications running on these devices in the enterprise, so that when you're playing with your fantasy team and creating network congestion, that the real productivity applications can actually get through. And then the third is a real tight collaboration with our video and collaboration applications with these devices. So it was great to have Tim there. He's a great guy, and I think he really enjoyed seeing the power of 20,000 people in our sales organization.
Now, one of the things you just went over is devices. When I think of Internet of Things, a lot of people want to be able to say, well, this company is, that company is. Just as you were the backbone of the Internet, I see you as the backbone of the Internet of all things.
Well, Jim, if you think about it, we talked about it after our last earnings call. We had a record quarter in Q4.
Right.
And we built this company based on currently about 15 billion connected devices. And our research had said that we'd have 50 billion by 2020 and 500 billion by 2030. Well, Mark and Salesforce this week came out and said it's not 50 billion, it's 75 billion. By the way, I hope they're right. So the connectivity and the convergence, and then more importantly, the real value in these connections are going to be from the data and the insights that can be derived from that data, and that's what the analytics and all are all about.
Well, that's like artificial intelligence. Where does Cisco fit in that?
Well, when you build out this infrastructure with 500 billion, it's going to be tremendously distributed, right? Because you're going to have devices everywhere. You have mining fields. And so think about a truck in a mining operation that's connected to the network via sensors. You could actually get intelligence from that vehicle that says that it's getting ready to have a problem, and you can proactively go fix it. But a lot of the information you're getting, Jim, has a shelf life associated with it. So you have to have this distributed infrastructure, and you have to be able to process that data at the edge, because the value of the information is going to expire.
Right. Now, when I hear about all this data, and I hear about far-ranging things, I hear about trucks that could be controlled, I think immediately, all right, if I'm a bad guy, I want to hack that system. You came from the security side. You know how fast that is growing.
Yes.
But how do you stop a hack, particularly when we understand from FireEye, which is a company we like, that Cisco is hackable?
Well, so two things. Number one, as we add more and more devices, the network is going to be the pervasive connectivity. Therefore, the network has to provide a tremendous level of security. So a quick example is credit card transactions. The way that they monitor my activity or my wife's activity, and they go through and they look for anomalies, right? Well, the network, we have the ability to do real-time analytics of the traffic, and we can look for those same anomalies. Now, relative to the issue that arose this week, this is not a vulnerability in our products. This is a process issue. It's the equivalent of if someone had the password to my computer, they could log in and they could install malware. And so it's really, we put out a bulletin in August about this with our customers, trying to help them think through processes and protecting passwords, because you have to have administrator rights or you have to plug into the device to actually make this happen. So we're very comfortable with where we are on security. We think that we have a big role to play in the future.
So the user has to be responsible at a certain point.
That's right.
Okay.
That's right. Much like we do.
Now, one of the things that John did that in terms of an average price was pretty good, bought back a lot of stock, okay? Yeah. Billions and billions and billions of dollars of stock. At the same time, there are people who want more growth than a buyback can give you. How do you satisfy those who want the big buyback, want the dividend, and those who want to get more than this single-digit router switching business that so much of Wall Street has characterized you by?
Yeah. Well, if you think about where we're seeing growth, we did have double-digit growth in several of our businesses. We mentioned collaboration. We talked about the Americas, which is a big piece of our business. And the thing that we're focused on is, A, we're going to return 50% of our free cash flow. We made that commitment. We're going to do it through a combination of dividends as well as buybacks. And the other thing is, we are moving to a more predictable financial model. We called out last quarter that we had 21% growth in our deferred product, which is reflective of software and subscription. If you look at our security business, 47% of our security business today is software and subscription. So we're making that transition, and I think that we need to be judged by our results in the future.
Okay, one last question. I know you could have been at the business roundtable with the president instead of here. You have a lot of offshore cash, maybe the most of them, all the companies I follow. How do we get it back?
Well, I think it's important as we look to Washington, we need focus on several issues. We need focus on patent reform. We need focus on tax reform. We've been very open about it, and I think it'd be good for our economy. I think it'd be good for jobs, and I think it'd be good for America. I
think it'd be great for Cisco.
I
Chuck
agree.
Robbins, CEO of Cisco, CSCO. Great to see you, sir.
Thank you, Jim.
Thank you.
Great to see you, buddy.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.